Aloha, everyone. Thank you for joining. We'll be starting in just one moment. All right. We'll be going in just a bit.
Someday love will find you. Someday love will find you.
Aloha and welcome back to the week that was. I'm your host, Colin Edsman, and what a banger of a week. Honestly, every week is a banger. It's just this week was great. Lots of all-time highs all over the place. But before we get into it, I'm going to double check, one, that I'm not on mute. Testes, testes, testes. Yep, that's good. All right, now let's make sure there's no random music playing in the background. Nope. All right. Seems like we're streaming from all three places well enough. Please, if you have any questions or comments, leave them in any one of the three chats that we are currently streaming from. Audio on Spaces, visual on Facebook, and we got the whole gamut here on YouTube. Let's get into it. Aloha and welcome back to the week that was. I am your host, Colin Edsman, and I'm streaming from my desk here in Hawaii. It was a powerful week, clean week for the indices. Soft jobs data hit Friday morning. Rate hike odds dropped hard, like to the floor. Like we're probably not going to get any kind of rate hike. I doubt we're going to get any kind of cut, so I imagine they're just going to stay the course all year. And the market responded by closing out this week at its best since April. The S&P 500 hit a fresh record high, the Nasdaq ripped more than 5%, the Dow pushed through 54,000 territory earlier in the week. Now, before I keep going, I'm going to double check that I haven't completely overloaded my computer trying to stream all this. All right, it's going here on Spaces, okay. It's going here on Facebook, okay. It's going here on YouTube. Okay, all right, awesome. So we also got the first post-IPO earnings from SpaceX, a monster software beat from Atlassian. I'm probably pronouncing that wrong because I learned about it this week because of its monster move. Stocks shot up over 35%, solid numbers from AMD and a handful of other names, and continued geopolitical noise around the Strait of Hormuz. Which I am super duper tired of talking about at this point. I'm just going to learn Farsi. Anybody got a book? Or maybe AI can teach me. Hey, Claude, teach me Farsi. But the Strait of Hormuz news kept the oil swinging all over the place. Now, it didn't get anywhere above $100, so honestly, nothing burger. If you like trading futures, it's a great time for you. Let's go through a quick headline rundown before we dig in. July non-farm payrolls came in at negative 23,000 versus positive 80,000 expected. Prior 2 months revised lower by a combined 103,000. Unemployment rate ticks down 4.1%. Markets took a soft labor data as a permission to ease rate hike fears. September hike odds fell to the mid 40%. S&P 500 closed Friday at 7757.64, up 0.62 on the day. Nasdaq up 1.3%, Dow up 0.28%. For the full week, S&P 500 up 3.58%, Nasdaq up 5.19%, Dow Jones up 2.96%. Whew! Now, underneath the tape, the same theme we've been tracking for weeks keeps showing up. The market is still sorting out which AI and growth stories it actually trusts with money and which ones seem to be actually returning on that capital. All right, just double checking everything's okay. I'm the only one out here in this space, so forgive me. I got to make sure all of the systems are running as we launch here. Now, if you're new to this, every Friday I run through the week's biggest stories, the narrative underneath the headlines, and we open up the space for live conversation if anybody jumps in any of the chats. We also talk about the agentic portfolio, Kairos Securities, which I created. That's been basically auto running for almost 2 months now, let's say, somewhere about there. But let's get into it. For our top stories, we're going to start with this one. The number that actually moved the market on Friday. Friday morning, the Labor Department dropped a genuine surprise. Non-farm payrolls fell 23,000 in July. Economists had been looking for roughly 80,000 plus. May and June were revised lower, a combined 103,000 jobs. The unemployment rate slipped to 4.1% from 4.2%, but that drop came mostly because people left the labor force. Participation fell 61.4%, a multi-year low at this point. The reason that this matters is under Fed Chair Kevin Warsh, the central bank has been offering, well, very little forward guidance. Markets have been forced to react to the data itself. A soft payroll print, the September's meeting, odds of a hike dropped to the mid 40s, 50s almost immediately. Treasury yields, of course, eased as equities bid. This is not a collapse in the labor market by any means of this, like how this sounds at all. I mean, there's not really a way to make this sound glorious, but this is not some, hey, run to your closest job and go find another one because maybe you want to fix it. No, 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 no. This is kind of a slow hire, slow fire. It's still a phase most people are using, phrase people are using right now, but it is clear evidence the economy is cooling enough that the Fed does not need to rush. Here's some takeaway for you guys as traders. Rate sensitive names and the broader risk on bid got a green light for the moment. That does not mean the inflation fight is anywhere near over, but in the near term, the path of least resistance just got at least less hawkish. Watch how the next inflation prints lands sometime next week. Now, if you're in the chat in any of the three chats at any point in time, whether it's live right now or later on in the future, just hey, drop where you're listening in from. I'm curious to hear. Because if you guys don't know, I'm here in the middle of the Pacific Ocean. And my island home is got the biggest moat on the planet. So I'm a big fan of companies that have moats too. But let's get into our next story. So, story two, the scoreboard. The indices just put up their strongest week performance since mid-April. S&P 500 up 3.58%, a record close of 7757.64 or $7,757.64. NASDAQ Composite closed at 5.19%, up to 26,690.62. Dow Jones up 6.96%. Wow, great job, Dow Jones. To 54,036.93. Monday already set the tone. Oil dropped on de-escalation. We got a great taco out of it. Where are we at here on the taco? Here it is. If you're looking at me on YouTube, yeah, taco. You guys got to know this at this point because we've been saying this for as long as I've basically been on the air here. Trump always chickens out on certain things. Now, as far as the whole Iran war situation goes, if you haven't noticed, we only war on the weekends, and then they just talk a bunch of shit all week. Well, maybe they're going to pull me off the air for that S word. Maybe we're PG-13 at this point. But they basically talk a bunch all week, and then on the weekend they do whatever they want. Friday night they're going to blow everything to pieces. Sunday during the day, it's fixed and the markets rip roar, right? Just like we get every other week. But oil dropped, de-escalation talk, the Dow hit a new closing high. Amazon crossed the 3 trillion market cap mark for the first time. The rest of the week stayed constructive, even through some mixed earnings reactions. Friday's jobs data simply poured gasoline on an already positive tape. Semis, software, and several high beta names led. The Russell 2000 also posted solid gains. It was not a narrow mega cap only story. Like even the agentic portfolio, they for some reason they pulled a call on the Russell and shoot, got some huge gains there. So I'm great to see that not only me personally, the agents are doing well as all of the people exposed to these markets are doing incredibly well right now. All right, so let's double check on everybody and make sure audio's good. All right, cool. Double check. Here we go. Working out well. Awesome. Make sure there's no random music playing like last week. Nope. All right, good to go. Now, I did find out that that random music that was playing the first half hour of the show was the lobby music for before you go on live on Spaces. I guess they play that music for the people who are listening. I'm not quite sure. At the moment, I've got a moth in here. Hello, visitor. Stay tuned, it's about to get good. All right, so for our next story, the big one for the day, earnings keep delivering. Now, the numbers that actually move the individual stocks, SpaceX and Atlassian explodes, and AMD. So, SpaceX reported its first quarter as a public company. Revenue came in at a staggering 7.8 billion, up 92% year over year, and well ahead of estimates. Net loss narrowed, as well as Starlink and AI segment both grew hard. But capital expenditure, especially the AI portion, came in higher than expected. We're looking at roughly 15 to 16 billion of AI related spend on the quarter alone. Shares sold off hard initially on the capex sticker shock, when then recovered strongly later in the week especially after the first lockup restrictions began to expire. Now, if you're a space enthusiast or even a shareholder of anything related to space, it's being moved by SpaceX. That's just how it goes. So I have shares of SpaceX. I was watching what was happening, right? This is the time where I felt more comfortable buying. The lockup opened up and we didn't see the stock blow through $100. It still stayed at $100 share. And today or yesterday, for whoever's listening, ran up maybe another 20 bucks, right? Maybe we finished at 118, 120. Who knows? I don't look at it that closely. But it ran and it stayed up, and that is a huge move for the AI build out on the space narrative. I'm super stoked to see where this is going. I'm also a decent sized shareholder of the ETF Warp by Van Eck because it's a great basket. It does have more SpaceX, so I'm a bit over leveraged there. Sue me. But I'm bullish on the whole space going to be the next big economy, especially when they start moving more data centers up there. Even our neighbors are getting Starlink, and I'm really excited to see the whole, well, how it goes, right? The transition from traditional internet to Starlink. What do they gain? What do they lack, right? So I'm excited to listen to them and how they go through this process and of course maybe do it for our home one day. Why not? Because if I can get great internet, that means I can stream to you guys without um, dropping any frames anywhere or messing up on anything, right? So it's going to be a great kind of thought experiment to see how my neighbors integrate Starlink into their already well, they also have a Tesla, like they have a power wall, they have solar, so that's kind of a great sandbox for how a home can be completely off the grid other than, like, let's say water and, well, sewer, but most of us have septic. But before I go into how my neighborhood functions, let's get into AMD. AMD delivered a clean quarter, revenue up 11.5 billion, up 50% year over year. Data center revenue more than doubled. Strong guidance into the back half of the year. The stock still saw some post earnings pressure amid the broader, quote, prove the AI spend, close quote, scrutiny. And we've been talking about that for a while, right? Show me the money. We need to know that the AI dollar that you're spending is recouping more than a dollar or not losing a dollar on that AI spend. Because what's the point of us investing in your company if you're just losing money on AI when it is proven that you can actually make money on AI? We talked about that on last week's podcast, somewhere in the gibbly garbly gook of nonsense that I was trying to pull off last week. Don't go watch it. Borderline unwatchable is a good title for the last week's podcast, but this one's getting off to a great start, and I'm happy to be here with all of you. Now let's double check on where we are, when we are. Great, this is working well. Awesome. So some other news we're gonna get into is Friday morning Atlassian. Yeah, dropped a blowout. Revenue 1.77 billion, up 28%. Small company, small potatoes. Cloud revenue up 31%. Adjusted EPS well ahead of estimates. The stock ripped more than 35%. Uh, Enterprise deal activity and AI product adoption. Rovo. Look it up. Were the clear drivers. Other notable prints this week included names across software, industrials, energy, healthcare, so many. I mean, even Elf. If you know anything about Elf, congratulations, you saw the stock rip this week. So, Elf is an interesting story. This may be a small sidebar because I'm a shareholder of Elf as well. Um, Elf got beat down over the last who knows how long. Let's look at, like, if you're here on YouTube, we're gonna see the actual chart. I'm gonna pull up here in just a moment. Let's see if we can pull that off without completely blowing up the system here. All right, Elf. So Elf is interesting. It's a beauty product company. They bought out Kylie Jenner's line of whatever she had. Now, I'm not gonna sit here like I deep dive into the company. These are companies my mother-in-law and my wife believe in. But what was interesting is Elf here, pulling it up. Ba-da-ba. Okay. So Elf had a huge week because they they turned their tariff dividends, right, or tariff refunds. So when you well, early in Trump's term, people had to pay tariff taxes basically because of what was going to cost for trade. That whole thing blew up and it was a big taco of a nothing. But companies like Elf are now getting refunds back for the original tariff spend. Some companies are merely absorbing that as, who knows, cash, capital, capex, don't know. But Elf is actually turning that tariff revenue or refund into direct consumer sales, right? So what they're going to do is they're going to take prices down on products that went up, and that is proof that it is possible to take your tariff refunds and push it back to the consumer, and that the stock price actually moves. As you can see here on the chart, it went from somewhere in the 80s, talked about it, it was great, ripped down here, back down, boom, and then boom, boom. Now we're up here at almost $100 a share. Now they've got beaten down a fair amount. Haley Bieber. Oh, yes, yeah, Haley Bieber's line. Yes, thank you. Mrs. Edsman came in and checked me on that one. She's the shareholder. I'm merely a share manager here. But as you can see, like it's gotten beat, it's come up a bit, but it's not up anywhere near from where it was. Elf got a bit beat down over the last year or so. So, and mostly because of the amount the amount of cost it was for bringing things overseas and making things cheap for people, right? So, and that made it really costly for them as a company. But now they're getting those refunds, and those refunds are going back to their consumer. And as you can see here, now that I've gotten the chart unfumbled with, like they had a double top here, like line to line double top. So obviously pretty bearish, but they had a support here that they broke right through and just kept falling. So their all-time high, at least is from what I can see here without zooming out for decades, I guess, was $221.83. Now down here at 100, little less than $100, hit a double low of $45 or so. Now we're in this share and we're in this weight down here in this area. So I'm excited to see the stock come back. And this is something bullish for not only Elf, but this is bullish for the entire uh, every company that had to pay for tariff taxes or tariff whatevers, who knows what they called them, but they're getting all these tariff refunds, and Elf proof that you can push that tariff refund to the consumer and that the stock price will go up. So hopefully other companies, let's say like FedEx, Amazon, or whatever, also do the same thing, and maybe they'll see some stock price movement as well. But here's some of the actual story here, because this all comes down to the same thing. The theme for the week is the market is no longer giving a blanket credit for, quote, we're spending on AI, close quote. It wants to see the revenue conservation, or at least operating leverage, right? Atlassian showed it. SpaceX growth was undeniable, but the sheer size of the ongoing AI build out still made some investors nervous short term. Here's the takeaway: dispersion is alive and well. High quality execution is being rewarded. Heavy spend without near term proof continues to get more of a suspicious, that's a police word, a suspicious look. Now we're going to get into a bonus story here in just a second, but before we do that, I am just going to get a drink of water. Now, how is everybody doing? Seems everything's working out well. Audio's working out here. I'm not talking to completely no one but me in my office this time. Congratulations, Colin. You aren't completely flubbing this one. Now, I want to hear from you guys. If you guys are exposed to AI at all, if you're doing well, please let me know. I personally love doing covered calls and options trading because it's just Once you learn it, it's dumb money. Once you can curb the greed, it's super dumb money, right? Because you can kind of live your life. And then I can create other things, build other things like an agentic desk, Pringles. Oh, yes. Mrs. Esmond always also brings up the point on Pringles. Now, if you haven't heard about Pringles this week, I'm going to give you a small bite of it. Small pun intended, I guess. But Pringles has spent, if I'm not mistaken, $5 million on AI. Yes, Pringles spent on AI. Now, what they're going to do is they're going to perfect the shape of their chip. And if you know what their chip is, it's got that kind of perfect stackable shape. I don't know how they could perfect it. So $5 million is not a huge spend for a company like Pringles, who probably bings in, I don't know, hundreds of million in revenue per year, maybe under a billion. They're not Doritos or anything, but they have proved that you can put AI on almost anything, like chips, now dipped in AI. But let's get into the next story. Oil. Ugh, I hate talking about it. Hormuz and the geopolitical noise. But it's important to talk about, well, the energy tape. Oil spent the week yo-yoing on Strait of Hormuz headlines. Taco everywhere. Just taco, taco, taco. Early week optimism around a possible Iran Oman deal and the de-escalation talk pushed prices lower. Brent briefly under $80. Later in the week, Iran related bills and transit fees talk sparked a bounce, but by Friday, Brent was back around the low 80s and finished the week lower overall. But the swing remains large. This remains a live risk factor for inflation and for residual rate hike fears. Worth keeping on the radar, but the equity market largely looked through it this week in favor of soft jobs data. Now, if you're in the chat, thank you for joining me and make money. Yes, thank you, Mrs. Esmond. Yes, back to the Pringles. Yes, and making money is very, very important. Now, as you can tell, there's a bit of a delay on how fast I get your chat as well as it comes back to you. So forgive me if we've moved on from the topic. As your responses come back in, I'm gonna come back to them. But let me just double check everything is running correctly. Everything is running well. I hope you're doing well wherever you are, whenever you are. If you've just tuned in, I'm Colin Edsman, host of The Week That Was, your weekly market recap. Now let's get into the market movers. Here's the breakdown. Friday close, jobs day. Dow up 151.83 points. S&P 500 up 47.68 points. Nasdaq up 342.6 points for the full week. S&P 500 up 3.58, Nasdaq up 5.19, Dow up 2.96, biggest weekly percentage since April. Key macro data. July non-farm payrolls down 23,000 versus the 80,000 estimate. Prior 2 months revised to negative 103,000 jobs. Unemployment rate sits at 4.1%, down from 4.2%. September Fed hike odds down to the mid 40%, so less than a coin flip at this point. Standing individual moves. Atlantean, ticker TEAM, up 35% on the earnings beat and cloud acceleration. SpaceX, ticker SPCX, volatile, but so solid off sold off on AI capex, then strong rebound later in the week. Airbnb, Twilio, Microchip also posted big gains on results. Several storage and software names were a bit on the mixed side. Here's the oil. Volatile on Hormuz headlines, but honestly, we should use that a different term at this point because volatile was the 126 we had on the futures. dang, that was some glorious days. Because no way you would stay at a high, short it there at 120. Yeah, whatever. Hindsight is great. We're not going to talk about that. Oil is boring. But it kept ripping around the oil price all week, not calling it volatile. More, I don't know, let's go with dodgy. That seems better. Finished the week lower, but with sharp intra-week swings. The key read: soft labor data plus resilient earnings equals risk on week and new highs. The market is still selective on AI-heavy names that cannot yet show clear returns on the spend. Now, I'm going to be going over this for the rest of your life, or at the very least, the rest of my life. If you're going to pick a stock, that company better be making money. Rule one. And if they're spending on AI, that AI needs to be proven to be also making revenue. Like, come on. Like, you can't just be, I like the company, buy it. No, if they're not making revenue, then you're just buying hopes and dreams. And hopes and dreams are not what makes money. Emotionless trading, or as close to it as you can get, right? Buying low, selling high, right? All of that trivial bullcrap that we try to feed ourselves, right? But we don't know when the low is, and we don't know when the high is. That is what they don't tell you in that tiny quote. All right, now let's get into the deeper angle behind all of this. There's always something going on under the surface. Here's the narrative that I'm watching. The market just got two pieces of information it liked. The labor market is cooling enough to reduce the urgency for another Fed hike. And well, enough companies are still delivering clean earnings, or at least clear growth. To support higher equities prices. At the same time, the AI capital expenditure debate is not going away. SpaceX's first public print was a perfect illustration. Revenue almost doubled. But the absolute dollars being poured into AI infrastructure still made investors flinch a bit. Two for flinching. And they're only flinching in the short term here. Atlassian. We're going to go ticker team. Yeah. By contrast, showed the other side of that trade. AI features actually growing up in usage, enterprise deals, and cloud growth that accelerated. Now, I'm excited to see where Pringles is making money as far as their AI spend on their chip shape. Because if they can refine it even more, that means they can get more chips per tube. Who knows where they're going to turn that AI spend? Maybe they're going to put that AI spend out on us. But let's get into Fed Chair Warsh. The Fed remains data dependent and light on guidance. That means every major print from jobs, CPI next week, etc., carries extra weight. Soft labor helps the equity bid right now, but sticky inflation later could reverse that quickly. So, as you can tell in my nice shirt, I'm out here in the middle of the night for me. Well, it's 8:30 p.m. for me. It's the middle of the morning for probably the rest of the world, honestly. Unless you're on my, well, time zone. You're hanging out with me from another timeline. But we're watching from outside the noise here. This week, the message was relatively straightforward. The economy is slowing just enough. Earnings are still doing the work, and the market is willing to pay for proof. Discipline still wins over narrative. Every day, any day. I brought that up last week, and it's going to win. And that's why moving forward, AI is going to help you win your trading. Now, I'm not going to tell you how or what or when, but AI will help you. And if it can help you at the very least stay disciplined, that's it. It'll pay for its subscription tenfold. Now, as we're getting into AI automated desk update, I'm going to talk to you about Kairos strategies just for a little while. Now, the desk, I let it run by itself all week. I didn't dabble with it, I didn't touch it. Honestly, I ran out of credits midway through the week just doing some other stuff. So, the desk itself ran, it closed the week higher, opened more options and closed more options, blah, 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 blah. All I'm going to tell you right now, because it honestly gets really wordy and nonsensical. The portfolio is working really well. It's fixing its own problems. It went through education this week. The CIO comes in and just looks at the overall narrative and sees if the portfolio needs adjustment to make sure that the macro fits the micro. Also, like I said, the education agent went through and made sure that all the agents were up to date as far as what good trading practices should be done. It was a spotless week as far as agents go, and I am grateful for them. For the overall time frame from where we started to where we are now, the portfolio is sitting at about, I want to say, 16-ish%, so up or down, somewhere about there, which is pretty good. Now it would be a bit higher, but I added more capital to the overall portfolio, so it dropped down the initial um, rip of like 20% in the first month. Now that it's running more of a wheel strategy for guaranteed income with a bit of a dusting of momentum and options trading, this seems to be a great way to at least produce what I'm looking for, about 5 to 10% a month, which is great, right? So if we're getting 5% a month, that's, let's say, 60% a year. If we're getting 10% a month, that's 120% a year. That's incredible movement. That would beat the S&P 500, right? So if I can program this desk to function at that sort of rough estimate, happy about it. The S&P 500 has never gotten 50% on a year. And, well, personally, I've done a little better for the short amount of time that I've been part of this. But no sense blowing my own horn here. The desk is doing well. My personal trading is doing pretty well. And there's lots of movement on the Robinhood chain side. If you are a token maxi, crypto maxi, if you're a degen, right? Who knows? There's a lot of things going on in that space. And let's talk about that for a second, because that's all part of the AI spend. Because AI was how a lot of things functioned, right? So we're getting a little bit of a drop in some frames here because I'm doing some movement. So forgive me on that. I will keep it short and hopefully it won't drop too many as I'm moving. So just so I can pull up a fun picture real fast. Nice. All right, thank you for sticking with me. I know I'm just staring blankly down here at my microphone. Hold on. Give me 1 second. Here we go. So Taco, I know. I know how hilarious is this crypto. So if you're not familiar what cryptocurrency is, I cannot tell you what it is in the short amount of time that I have to talk about it. But basically, it is a digital currency. Now, there are different types of digital currencies, right? So the most well-known one is Bitcoin, and some of the least known ones, well, could be named, I don't know, Cash Cat or something like that. I don't know. Some of the, no, I'm just kidding. Cash Cat's pretty good, pretty good. But I'm talking to you about Taco. So this one was designed by AI, invented by one of my friends, and now my friend's being followed by Vlad Tenev, the CEO of Robinhood, so Taco now became a serious meme coin. I don't know how this happened, but it did. So for Taco, if you don't know what a taco is or a taco trade, it means Trump always chickens out. Like I was talking about earlier, where we only war on the weekends, that's a tradable strategy at this point, and we turn that tradable strategy well, into a cryptocurrency called Taco, and it's been doing pretty damn well for being about 3 weeks old. It is as violent and volatile as any cryptocurrency meme coin at that market cap that we've seen. It went from 37,000 market cap to a $500,000 market cap. It's ripping and roaring all over the place. But now that it's got some legs underneath it, I think we can build something actually genuine here. So I'm excited to see where Taco goes. Some other things on the week, like I said, here we go. Elf ripping and roaring because it was back and then it dropped and then it was back. I mean, I was getting all kinds of stuff going on. Brother Edward got his platinum card. Congratulations to Brother Edward. I'll see you at Hood Summit. GM. All right. So on and also on our partnership with Earnings Watcher, make sure you check out their UI as well as their services. Great way to get into trading options if you're not used to it yet. They have I call them sandboxes, but it's paper trading. There we go. I don't know. I never paper traded because I use Robinhood, and we don't have that on Robinhood, so I'm not a big paper trading fan. I'm a person more of like, let's buy one share and see what happens, and if it doesn't fall through the floor, and I don't freak out, it's a good trade. But they're always watching earnings, right? So that's very important 4 times a year, basically. And then in between, we double check everything on our own. Lots of updates from Taco, so please check that out if you're looking for some hilarious meme coin humor, memes all over the place, and maybe something to like this is as close to gambling as I get, honestly, is meme coins. And this one, I had to know the damn guy to even trust it. And that's already kind of a tough trust because at the end of the day, it's a meme coin. Oh, have you guys been seeing this all week? Oh my gosh. This has been blowing up all week. I mean, I'm hoping this guy is having a great time with it because it is everywhere. He works here at the All In podcast with Jason. Jason, as you know from Hood Summit last year, a friend of Vlad Tenev. So that's funny how that gets around sometimes, right, guys? Oh my goodness. But before we go on and I'll just dragging you down my Twitter feed here, let's look into some of the bullish outlook and what opportunities we have for next week. So, looking forward here, we got soft labor, so that means more room for the Fed to stay patient. The jobs miss buys a little bit of time. If next week's CPI cooperates, the path of least resistance for equities remains higher in the near term. Now, here's the next part. Earnings is the next angle. Earnings season is not necessarily done. More names still reporting. The market continues to reward clear cloud/AI conversion and punish pure spend stories, like I've been talking about forever. I'm going to be bending your ear about making sure that your AI spend makes some damn money. And make sure that they're also staying pretty selective as well. For we got another angle on the volatility side if you want to play that angle. Hormuz headlines, any upside surprise in inflation or a sudden shift in Fed speak can still produce two-way price action. Defined risk remains the priority here. Defined risk being, let's say, covered calls, cash secured puts, that sort of thing, right? You know how much you're going to be out, right? You don't have any just open futures, right, with no stops at all. Like that's just crazy. You're just like running around in a firefight without a bulletproof vest, at least, right? Like you got where protect your positions. Like always use stops. One thing I've been learning from watching the agents trade is that they move stops religiously. Like when the stock moves up, they move up the stop closer to it to preserve whatever profit is in there. And I'm like, that's a great strategy. So I might have start learning from the damn agents of like really just like religiously moving stops. Because that doesn't kill anybody, right? It doesn't. You didn't sell anything. You didn't buy anything. You're like, I'm just gonna move the stop up, and if it falls to the floor, fine. If it keeps going, fine, right? But usually, sometimes you take the whole nugget out, right? Rather than trimming a little profits, you're like, I'm just taking the whole thing, and all of a sudden it runs. But if you put a stop there, it's like you sort of took the whole thing, right? You just like, but if it keeps running, you didn't, and you're like, yeah, I'm good. and you just keep ratcheting up those stops. So I gotta say thank you for the agents for teaching me that the amount of stops that it moves, like it is just like a crack addict on how it moves its stops. It's wild. So here's some stuff that I'm watching for specifically though next week. CPI print is Wednesday, and any further commentary from the Fed speakers, because this is Daddy Wash season. We don't know what the heck is going on. We got a 3 to 9 uh, descent last week, right? So it gets a little bit dodgy right now, right? It's we're done with Jerome Powell, but we don't know what the heck Wash does. Follow through in the software and semiconductor complex after this week's moves as well. Oil and Strait of Hormuz situation, blah, 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 blah. I hate talking about oil, but we're going to keep talking about it until this damn war is done, right? Because that's what's important. That's what's moving the markets right now is taco trades, oil, and then hopefully companies that are spending on AI are making money on that AI. Here's what I'm not doing and what I'd recommend you don't do. Now, if you don't know, this isn't financial advice. I am not your financial advisor. Take what I say with a grain of salt. I'm some dude on the internet, eh? But chasing every name that simply says AI is not a good idea. Wait for the receipts and then invest in something with AI. All right. Ugh. Another great pod. Thank you all for joining me. There wasn't a whole lot of chat content today, but that's fine. You guys can check in whenever you want. I'm just happy to be here on the airwaves for whenever you need to check in. I know it's late, so please check on it tomorrow when there's most likely going to be more war. Because it's Saturday and war only happens on the weekends. As far as the weekend goes, I'm very excited to see my grandmother. She's coming to visit on Sunday. Tomorrow, I get to sit in the salon and listen to the drama. Now, if you don't know, I wrote a couple of books and I'm going to show you them real fast. Not too long. All right, so one of those books is for young adults and the other book is for everybody else. Not Financial Advice is the book I'd recommend for you as podcasters here on my channel because it's the best book that I could have ever written to help you build a legacy that will never die. Now, I can't make you not die. That's not how entropy works. I'm working on time travel, not immortality. But whatever. Not Financial Advice is great for building a legacy that will outlive both of us. Planting seeds for trees that you'll never sit in the shade of. It's important to start as soon as you can. We don't have a whole lot here in Hawaii, right? We know that. Like, it's not news that it's tough for a lot of people, but we all overspend on things emotionally. So it's important that we take some of that emotional spending and convert it into something that could grow past our own lifetimes. So please check out Not Financial Advice. You won't be disappointed. Now, for our closing here, here's what I want you to take away from the week. The market got soft on the jobs report, took the rate hike odds lower, and ran to new highs for the best week since April. Earnings kept delivering dispersion. Some AI heavy names got rewarded for growth. Others got questioned on size of the spend. The broader tape stayed constructive. Discipline over narrative always wins. For next week, we're looking at CPI is the big one. Watch how the markets digest inflation after the soft labor data. And keep an eye on any residual geopolitical noise around oil. If you've got questions at any point in time, I know there's nobody in any of these chats, so please, I know I'm talking to nobody at the moment, but if you've got any questions when you do get here, please drop them in the chat. I'm always willing to get back to them, hate or not. So please, drop me some comments. All right. So as always, mahalo for being here. Thank you for spending some time with me. Farewell. Ahui ho. Please stay safe. Keep an eye on that mental health of yours. I'll see you all in the markets, as well as on the porch. Aloha.